Hey there, everybody. Thomas Wood with Basecamp Trading. It is Wednesday, March 1st already, and we're going to take a look at bonds, and more specifically what we were looking at this morning that said, okay, bonds should keep on pushing lower, because it ended up playing out really nicely and dropping down quite a bit today. Now, it all comes back to the big picture. I always tell people, don't lose sight of the big picture, and the big picture for bonds is this pennant you see here on the daily price chart. And if you look at where we were over the past couple of days, we've just been flirting with the upper end of this pennant, right up against that resistance right around 152 level. Now, if you look at what happened, so we go, okay, big picture is we're right at the upper end of the pennant. And then we drill down and we look at our 240-minute chart. And this is what triggered yesterday and then followed through today. Here's a great bearish divergence. You can see where we went high number 1 and then pulled back down, went back up high number 2, just about equally as high, right up against that daily trend line. But look at the significant difference in the momentum. See how much weaker momentum was? And this is more specifically what we call a no return divergence, where the histograms do not even return back to positive. So it goes bullish, bearish, and stays bearish on that second rally. So that's just an even better setup for no return bearish divergence. And when you combine that with the fact that we were right up against the resistance on the dailies, then you can look at this going, okay, we'll look for it to come all the way back down to the lower end of the pennant, which is where we basically got to today. So next couple of days, what we're going to be watching for is, can we break out of this pennant pattern? And if we can, we'll look for some pretty good follow through. The other thing to keep in mind is the Fed has hinted that that an interest rate hike is still on the table for March. So be aware of that. If we do have an interest rate hike in March, we're going to expect bonds to just tank like we did back here last time we had an interest rate hike. So just be keeping your eye out for that and watching for this pennant breakout. Alrighty, that's all I have for you for today. That's just a good example of how you can combine longer time frame analysis, then drill down, look short term for confirmation of a setup, and then look for follow through based on the longer time frame, the initial time frame. So that's it for today. I'll see you in the trading room bright and early tomorrow morning. Until next time, happy trading.